Good afternoon. Welcome to the meeting of Audit and Accounts. For the benefit of those people who are not regular attenders, there are no fire alarms scheduled for this evening or this afternoon. Therefore, if the fire alarm sounds, please evacuate the building immediately. The fire exits are located at the rear and side of this room. Go down the stairs and meet in War Memorial Park. Oh dear, it's going to be wet. Let's hope there's not a fire. Please note that this meeting is being web... We could, but we would have to give so much notice, Sean. I'm just checking that this meeting is being webcast, as we understand there have been problems with the webcasting. Okay, and please can all members and public switch their phones off or put them on silent. Apologies for absence and substitutions this afternoon. I have apologies from Councillor Stuart Parker, and Councillor Leake is being substituted by Councillor Miller, and Councillor Tilbury has notified me that he could be late attending the meeting as he has to take his son to university today. Any declarations of interest? Yes, Dan?
Yes, Chairman. On paper 6, RIPA, Regulatory of Investigatory Powers Act, Future Reporting. I declare an interest because I'm a magistrate.
Thank you for that. Anybody else? No. Are there any urgent matters? No. Minutes of the meeting held on the 1st of February. Any problems with that, or can we take those as approved? Thank you. Moving on to item 5. This is the usual report, and I'll ask Jackie Tatum to introduce it.
Thank you. This is the standard item on the use of various activities which either fall under RIPA or outside of RIPA but are some form of surveillance. It's just the standard statistics, so if there's any questions on any of these.
Do I have any questions? Councillor Fillmore?
Yeah, basically, just as a general query on issues about investigatory powers, is there ever any monitoring by council officers of the use of staff or members' access badges, i.e. tracking of people moving in and out of the building or around the building? Is there, if then, why would this be?
I'm confused by the question.
Oh, yeah. Why? It's a straightforward question.
How does it relate to the paper?
It's part of the RIPA procedure, surely. It's pertinent to the matter in hand.
I'm not sure it's pertinent to RIPA, but I'll ask Jackie if she's got any comments.
My answer is I wouldn't be sure. The only circumstances I can imagine that would be used if there were some form of investigation. If there was a theft from offices, it might be, checking who accessed those offices at a particular time, but it's not something that would be used as a standard.
Does that answer the question? Any others? Okay, we'll move on to agenda item 6. Okay, agenda item 6, Regulation of Investigatory Powers, Future Reporting Options. The committee's due on the suggested options are requested. Jackie, could you introduce this?
This is a paper that was requested 2 meetings ago in terms of how we report the statistics in the future to members of Audit and Accounts Committee. It follows on from our inspection by the Office of Surveillance Commissioners, where a comment was made by the inspector at the time about our reporting. Can I just clarify that the recommendation, could I refer you to the conclusion under 5.1.1? They're the specific items that the committee is requested to agree on. The paper gives two options for future reporting, and the views of committee are sought.
Going to ask the committee for its views. Councillor Keating.
Thank you, Chair. It's quite obvious to me, and I am assuming to other members of the committee, that there are quite a small number of investigations undertaken, and in those circumstances I believe it would be overkill to set up a subcommittee, even though I would have been in favour of it had it been necessary. But in the circumstances, I'd like to suggest that option one, i.e. Stay as we are, would be the most effective option for us, because there'd be little point in us setting up a subcommittee for perhaps one investigation every 5 years. That's my point of view. Thank you.
Councillor Sherlock.
I would agree with Councillor Keating, and I think we ought to just go forward with that.
I trust you won't make a habit of this.
I hope you're not making a political point.
I can't think why you would suggest that. I think we've got agreement that that is the option we want to go to. What would we like to see coming through on pink papers should the necessity arise? Councillor Keating.
I believe that we should have no information about the individual, either no information or the information redacted. We should have a very clear explanation of the issue and any background information that would impinge upon a decision about the issue. But I believe we need to be very clear as councillors that it is not within our remit to participate in any shape or form in any such investigation, and that should control our contribution at Audit and Governance, in that we should be expressing general views in relation to any investigation, but not specific to challenge a question that has been decided, which is we will have an investigation. Thank you.
I agree with you, Sean. In this case, is it a personal point? Councillor Miller.
I'll take something out of Councillor Keating's vocabulary. Clarification. If the officers decide, under any context of these particular investigations, that the information that's coming across, surely that's at the point where it should be decided whether it comes in on pink paper or not. Because I understand the point of redacting certainly personal information, but circumstances could dictate that it would have to be treated as confidential with some kind of privacy marking on it. And then we have to be prepared for that. I would suggest it's going to be very rare, if at all, bearing in mind the frequency of the kind of reports that have been coming in the past. But am I correct in assuming that it's up to the officers who conduct the investigations, even with the redaction, that it could still come before the committee and under the pink paper rules, if you like?
Well, the pink paper rules are that it's confidential to the committee. And that certainly would be my understanding of what we would get. We would, because the details would be for us and us alone. We would certainly not have names. We would not be involved in making the decision. That is not our job. Our job is to review why was that decision made, do we agree with it, do we think that perhaps a different approach should be taken in future. So from that point of view, I would say we do not need officers to attend these meetings. We will look at their decisions based on the information that they provide us with on pink papers. But we are there to review the decisions that have been made, not to make decisions. Councillor Keating.
Perhaps I could take a moment to elaborate on the point I was generally making. If we get any report to which pink papers are attached, we have an obligation to retain the confidentiality within the meeting or discuss it in private session, the contents of the pink paper. But we have a general opportunity to talk policy in relation to the issues when we're talking about the white paper to which the pink paper is attached. Let me just, for example, if there was an investigation into a serious issue, there could well be reputational issues for the council, as well as the practical issues of the particular alleged offence. Now, we would all, I suspect, want to protect and preserve the reputation of the council, but that should not blind us, if necessary, to raising the issues about reputation. So I think we should take the standard approach that we do with pink papers. Do not divulge the content of the pink papers in a public webcast. But if necessary, we want to discuss it, we should go into private session. But whilst retaining the right, and perhaps even the obligation, to discuss the other general issues in open session. Thank you, Chair.
Once again, I agree with you, Councillor Keating. Pink papers are always in closed session. However, any policy issues arising from it, providing we do not refer directly to the pink papers themselves, would be in an open session. Whether we do that immediately following discussion of the pink papers, or we do it at a subsequent meeting under the normal RIPA, is debatable. It could well be that if we did have pink papers, we might want to go back into open session afterwards. However, that's difficult for the public if we jump in and out. Certainly.
Certainly, when I was chairing committees and pink papers were on the agenda, I organised the agenda such that the paper which incorporated pink papers became the last item on the agenda. So that one could rationally and reasonably turn the webcast off and ask any public to leave because it was the last item and there was a pink paper, and that would give a coherence to the meeting, which wasn't going in and out of private session.
I think that's what I was trying to avoid in my previous comments. But yes, we agree with that. But the question is, do we discuss policy matters under open session? If we do, then we can't do it following discussion of pink papers. We can't go back into open session unless you decide otherwise. Right, to summarise where we are, we have opted for option one, and we would look at a pink paper which discussed the issue, was completely redacted, so we didn't know any details of the actual complainee or complaineur. and any policy issues arising from it will be discussed at a subsequent meeting. So agreed? Thank you. Item 7 on the agenda, the Corporate Risk Register, which has been circulated. We are asked to note the contents. Are there any questions? Or are we happy with it as it stands?
Happy with it, Chairman.
Okay, is that agreed? Hold on.
Thank you, Chair. You haven't asked me to introduce the report, so that's fine by me. I'll move on with that one. That's great.
I was trying not to waste your time.
That's great. I do appreciate it, Chair. What I just wanted to do is point out paragraph 4.8 of my report, which is on page 29. And it's just to inform the committee that as part of the 16-17 audit plan, my team will be reviewing the mitigations that are in place for each of the corporate risks to ensure they are in place, and the committee will receive the report in form and view of their outcome as normal course of events.
I should ask you to speak now, because that is useful information. Thank you. And the paper is noted. Item 8, and I'll ask Mr. Gundry not to repeat himself too much. Go ahead, Paul.
Thank you, Chair. This is just to bring to the committee the audits I'm planning to do during the 16-17 financial year, and I am going to be looking for the committee to approve the plan. And also we have the internal audit charter, which is reviewed every year, and there are a couple of amendments in there which are highlighted in paragraph 3.22, which is on page 50, so you're aware of those changes. They're more to do with structural changes and changes in legislation. So I'll open to questions. Thank you.
Councillor Philibor.
One or two issues, Chair. In commuted sums, could we expand this audit to include issues for the residents in the area that pay service charges for maintenance of green spaces? Certainly, these are sums that developers pay to the council for council to cut the grass and do general maintenance. If we can add this brief into the audit, the audit team look at the issues that residents have raised with us in the areas where the developer has chosen not to pay these sums to the council. Instead, a third-party management company has been created to charge the residents directly for maintenance, so in effect the residents are being charged twice.
Mr. Gundry.
Thank you, Chair. Yes, we'll add that to the scope of the audit.
Councillor Miller.
Maybe it's English and nomenclature. I've got a question on paragraph 3.4.1. As in 2015-16, BDBC will carry out the following audit for the cost of £25,000 for Hart District Council. Who's paying whom, and who's taking the cost?
Thank you, Chair. That's we're carrying out the work for Hart, and Hart are paying us to do the works.
This forms part of another report which we'll be getting back later next year. Mr. Keating?
Subsequent question to that is that full cost recovery?
It is, yes.
On what basis is the full cost recovery calculated? Please.
So it's based on an hourly rate for my team plus the 10% management fee.
Yes, we do make money out of it. 10% management fee. Anybody else? Okay, can we approve the... Sorry, Councillor Keating?
I'm on page 51. Item 3.3.6. the last item in the bullet points there is called New Property System. Now, I'm not sure what that actually means, and let me explain. I could understand somebody saying, if we buy new property, we need to record and maintain it. Or, if we buy a new system, we'll only use it for property. Let me explain why I question. I've been involved in audit and governance for a considerable number of years now. Now, it doesn't mean I know everything or even anything, but I recollect going back at least 5 or 6 years that we had a property department whose activity was based probably solely on paper records, books, notebooks, all different kinds of paper records, whilst the rest of us in 2007, 2008 were going digital. And we in audit at that time encouraged, didn't demand, we encouraged property services to go digital, to have a reliable, extensive property recording system which could be interrogated. Is that what we're talking about here is the question?
Yes, it is.
Of course you may.
Thank you, Chair. Is the working group to finalise the setting up of the system, or is it the operation of the system?
This is the group that's going through the procurement process to procure the new system and implement the new system.
We haven't got it yet.
Subject to deja vu here, Chair. In terms of Councillor Keating's observations, the digitalisation, we had the property manager in some months ago that explained that elements of most of the elements are in different forms of digital. So we've got digital mapping, we've got a workflow and scanning for the base documents, but they are sort of separate systems at the moment, and what's being procured is a property, probably that better description would be a property management information system on there, and what's being procured is hopefully a more comprehensive system that will bring all of those strands together and enable any elements that aren't currently digitised or aren't digital in the way that they ought to be brought up to speed. That's out for it. Given the scale of the procurement, it's an OG procurement, so it's an EU procurement, and it's going through that process at the moment. And this is reflecting, as Paul said, Audit's role on that project team that's been set up for implementation in this current financial year.
You happy with that, Councillor Keating? You are never speechless.
Exactly. Thank you for that answer, and at least I understand the answer. Which I usually do when you speak. But the reality is, I'm absolutely speechless that we've gone from relying on paper less than 10 years ago, to the point where we've now got a multitude of computer systems for a multitude of different facets of property, that here we are less than 10 years later having to procure another new computer system to look after the last lot of computerization. Could you perhaps, Kevin, give us an indication of the expected timescale? And can I say, in these circumstances, I welcome the internal audit being a part of the working group. Thank you.
Chair, generally the procurement tenders are due back end of April, beginning of May. Evaluation is going to occur during May, and then implementation will start with a proposal that the implementation, or the bulk of the implementation, will occur in this financial year, so that it be in place by the end of the financial year. So that's the time frame.
Mr. Gumtree.
I just want to add to that that we know that the implementation of the property system is a recommendation that we are following through our progress report, so the committee will be kept up to speed with the progress of the implementation.
Now that is good news. Councillor Putty.
Oh, thank you, Chairman. 3.3.8. Why do we need the contingency 80 days to be included in the plan for unplanned work?
Thank you, Chair. That's just in case something comes up during the year. For example, we might come to an audit committee and the committee might request that my team carry out some work. So I do need to carry some contingency day because I wouldn't like to say no to you. And again, if Kevin or the Chief Executive asked me to carry out some work like I did last year, when he asked me to look at something on commissioning, which obviously the committee received report, that comes out of that contingency day.
Councillor Keating.
Thank you, Chair. This is a new item. Way back in 2015, a whole 4 months ago, in March of last year, in other words, 12 months ago, there was a decision made that the Cabinet agrees the release of a £1 million fund or slice of money from the Invest to Grow capital budget for the installation of solar panels on council properties in 2015-16. Subject to satisfactory final scheme appraisals. Where are we with that? And is it, could internal audit plan to look at that at an early point, please?
Well, I'll ask Mr. Jacquist for an initial response.
Thank you, Chair. The scheme delivery was delayed. There's been a portfolio holder report that was in March. Yes. So there's a this year, March 16th. So there's been a portfolio holder report that's updated members on the reasons for the delay, which are to do with mainly to do with tariff changes and government changes to, as you'll be aware, to the subsidy. So there's been significant changes there. But that decision for portfolio holder report was recommending that some schemes still went forward on a lower tariff basis, funded from the green green reserve, so from a different, not from a different funding source. So that's the position, and as far as I'm aware, and unless somebody can tell me otherwise, that the contracts are being signed, and the intention is that those schemes will be delivered.
Can I take it from what you just said that the £1 million reserve has not been spent at all?
The £1 million has not been spent in 15-16, and the value of the schemes is not £1 million. It's about 150,000, and there are a range of reasons for that. One are what's doable. Two, a number of the council's sites were not suitable. So again, that's around is the facility, are the roofs capable of taking the panels, or what? Is there shading? So a number of sites have shading and or roof issues. So that ruled out a number from the original proposal. And the schemes that are left come to about 150,000. I think there are four schemes.
Okay, so those 4 schemes come out of the 1 million reserve?
They're being funded from the green reserve, which I think is 900,000 to be accurate, Chair.
Councillor Putty.
Thank you, Chairman. Yes, from what we heard, with a reduction in tariff, is that going to be cost effective really to carry on with that particular plan?
The report that went to portfolio holders recently for the portfolio holder decision went through the different tariff rates, and the tariffs are much reduced. Therefore, it wasn't regarded, and I didn't, in terms of the return, it wasn't a invest to grow scheme. So the levels of return are 3%-ish. So they're not at the sort of invest to grow level, but they are there is a return, and there is also the wider carbon benefits as well. And therefore, that's why the funding route that the portfolio holders have chosen is the green investment fund, or the green grant fund, rather than the investor grow funding. So, in answer to your question, it's very challenging going forward. I think the advice we've had is that you're probably going to need to see how the land lies for sort of 12 months when the tariff rates come in, because whilst the tariff rates have reduced a lot, the cost of the equipment is coming down as well. So there are offsetting things, and I think the advice or the information we've had is some schemes, particularly of certain scale and certain roofs, may be more viable in the future, but we probably need to get the ones that members have agreed in place, and see what happens to future energy prices as well, because obviously at the moment energy prices have dipped right down with the oil price. So a period of implement these, which was an initial pilot anyway, and then a bit of taking stock to be able to fully answer your question.
Can we monitor it so that we can in future really know that whether it is coming from the green pot, but still whether it is viable really to carry on or not?
Yes, Chair, that will be part of the current pilots will be monitoring the returns, and we can do that. Yeah.
And that's reporting back to this committee or to the performance panel?
It would be reporting presumably to performance panel as a first point. In terms, it would be one of the elements of the normal council plan of financial returns.
I'll take Councillor Keating first.
Thank you, Chair. There is an additional benefit that people very often discount, and that is your actual electricity bills go down as well. But where could you, could Kevin, please, could you tell us where will we find this reflected in the accounts in the way that you have said it? Because we have a council decision to spend £1 million, and now we have a council decision, or we have a council officer's decision not to spend £1 million, and that needs to be reflected in one form or another somewhere in the accounts. Thank you.
Chair, yeah, I mean, it will be reflected. There was an original cabinet decision, and then there's been a follow-up portfolio holder decision. So it's not just an officer decision, Chair. Just to be clear on that. Just to be clear on that, there's a portfolio holder decision on that as well. It will be reflected in the capital programme. So there will, and I think it's already reflected in the capital programme that council have agreed. Yeah.
Revisions part of the capital programme, and it will now be appearing in the main part of the programme.
So in terms of where it would appear in the accounts, it would be in the capital programme, and in terms of the monitoring, then the capital programme is obviously monitored through the quarterly monitoring to performance panel, and it will be part of that monitoring.
Would the balance of the reserve be available for future green investment, or are we saying it's going to be returned to general reserves?
It's that reserve, that original money is still earmarked, Chair. Obviously, the future decision of it is a member decision of how it's used, but it's still the amount that's not used for the solar is still an earmarked reserve.
Does that solve your problem, Councillor Keating? Councillor Flemmel.
For me, it's just the issue that surely this is an internal audit issue. That basically, as far as the alternative investment in this scheme goes, has it been an effective investment? And are there any lessons we can learn for it? I mean, that's the bottom line for me.
As the implementation hasn't even occurred yet, it's difficult for internal audit to come back and tell you how effective it's been.
Surely that's one of the problems we got here, that we're hanging our feet. You know, we put £1 million aside, and we're just sat waiting now to see what's going to happen.
That's a political matter. Councillor Tilbury.
Where from another, I think probably from the performance panel, that one of the issues was that we arranged to get the work done through a contractor, which was another council. I think it was Peterborough from memory. And the issue was they were unable to do the work, although we could have proceeded with the schemes, because there was I think because of changes in the tariffs, there was they had so much work on. They just said, well, we can't do yours. You know, we sort of basically putting all our eggs in one basket. When we certainly looked at this locally. There are local contractors who could have done this, but it was all to do with the procurement. It was sort of easier, but the reality is we've ended up with not doing anything because of trying to avoid procurement rules, EU and such like, and trying to bypass that. It's just that we've ended up failing to do what we set out to achieve in the first place. Whereas, you know, there are other ways that may have been, actually, no, with hindsight, there might have been a better way of doing it. But I think that's the case, as far as I recall. But that sort of is a large part of the problem, I think.
Mr. Gundry, what are your views on this?
More than happy to look at anything the committee wants me to, of course, which is why I carry a contingency. But yeah, more than happy to look at it, but we'd obviously have to ensure that there is an output that I can present to the committee, and that's probably something on the timing that has already been mentioned.
Yeah, I mean, this is an area that's already been to performance panel, so I'm not convinced that it's an area for the audit committee, but obviously it's up to members to determine whether they feel differently.
In my view, it's a bit premature, but Councillor Keating.
I have a defective memory, but I'm chair of the performance panel. Pardon? Until next month I am. All right, and you can have it if you want. But the issue of the green investment and the procuring of panels for council buildings was discussed at the performance panel, but the issue of the £1 million wasn't. £1 million was a budget allocation. But that wasn't discussed, to my recollection. I had been known to be wrong once before. It wasn't discussed, and that was the point I was raising. Because the reality is, if we're going to spend, as a borough council, 150 grand, first of all, I don't think it would apply in terms of European procurement rules. And secondly, I'd be surprised if there was of any great value in the end. But it's the £1 million that I was raising. Okay? Thank you.
As chairman of the performance panel, isn't something you should be discussing?
The allocation of budget, I don't believe, is a performance panel issue, because that's a wider issue of substance.
Thank you. Kevin?
Well, Chair, again, I would say if you look at terms of reference, it's probably an area that's more fitting for performance and scrutiny than it is for the audit committee. But again, the performance panel is a panel of scrutiny committee. So in terms of budget, outcomes against budget, delivery of policy, those are areas that fit more neatly into performance and performance management rather than a particular internal audit issue, would be my advice, Chair.
I'm with Mr. Jacquist on this. As a committee, what do we feel? Do we leave it as it is? Councillor Keating?
I'll bring it up. I'll bring it up as scrutiny.
That's probably the best place for it. Thank you. Anything else on this paper? Or do we approve it?
Approve it.
All those in favour? Agreed. Item 9, accounting policies and changes to the statement of accounts for 15/16, and Dean Pleats will present. Dean?
Thank you, Chair. So we're on item 9 of the agenda on page 65. This is a report on the accounting policies that the Council will be publishing along with its statement of accounts for 2015-16. It also covers, gives you a bit of a heads up on any accounting changes as a result of the update of the Accounting Code of Practice. There's no significant changes to the accounting policies. There's a few minor wording changes. The main change relates to the introduction of IFRS 13, which is to do with the fair value of assets, and it's sort of a new concept that's been introduced. It's out there already for the private sector, and the local authority accounting code of practice has now adopted IFRS 13 and introduced this concept of fair value. Fair value is basically the price that you would expect to get for selling an asset, so it's a sort of exit value in a normal sort of market. The Accounting Code of Practice updates for IFRS 13 has been updated for IFRS 13. For the council, most of the council's assets are already valued at fair value. We have 150 million of cash investments which are valued at fair value, and we have 240 million of investment properties that are valued at fair value. So the only area where this might impact would have been on our property, plant and equipment, which is our operational assets. However, the introduction by the local authority accounting code has basically said that this will not apply, so they've made an exception for property, plant and equipment, and they've introduced something called the current value, which takes into account the sort of current use of that asset. So we're not expecting the introduction of IFRS 13 to have any significant impact on our asset valuations. However, we do have to produce a lot more detail in our disclosures in the notes to the accounts around the valuation techniques and assumptions that have been made. So there's more notes and more disclosures, and that's about it really. So if you've got any questions, I will do my best to answer them. Thank you.
Councillor Keating.
Thank you, Chair. On page 67, at the bottom of the page, item 5.5, you just referred to that particular issue. Having disregarded, I don't mean irrationally, the operational stuff, are there any other category that would be covered by the paragraph as written? As written.
There may well be within investment properties some assets, it might be a small piece of land or something that we're using for a particular purpose, perhaps as an extra car park or whatever, that may need to change the way that we value it, depending on whether that is the best value we can get from that piece of land. The rules on it, you do have to look at the legality, you do have to look at the possibility of planning permission and those sorts of issues. So it's a bit of a grey area in terms of what is the fair value, what is the best use of that particular piece of land. So there may well be some small bits of assets which we would need to look at, but they're not likely to be material to the accounts.
Thank you for that answer, and it's obvious from what you're saying that there are no significant values associated with this particular issue, having done the cash, having done the buildings and investments, and having disposed of or accounted for the operational assets. The rest is insignificant materially. So I'll accept that. Thank you.
Councillor Putty.
Chairman, just to be clear, I am declaring an interest on the LGPS part of this Appendix 1.
If you wish to. asked what grounds you wish to declare an interest. Thank you for that. Anybody else want to chip in? Right, we note. We note. Right, we have waited, or they have waited patiently. Welcome to Kate Handy and Malcolm Haynes from KY. And please tell us about your audit plan.
Okay, thank you, Chairman. So before I start, the agenda item is called Plan and Fee Proposal for 16-17. It's actually 15-16. We're a year behind internal audit. Well, we can't do our bit until you've actually produced your accounts, and you don't do that till the end of June. So, you can. They were more.
Don't go there, Sean.
We'd be delighted. So, this is our audit plan for 15-16. As it says in the introduction, that the purpose is to provide you with a basis to review our proposed approach and scope. And to give you an opportunity to say whether there are any other matters that you consider might influence our audit. The plan that you've got before you has been approved by officers. And before we go into any of the detail, just to remind you of our responsibilities as external auditors, there's two main things that we have to do. Firstly, arrive on an opinion on your statement of accounts that they're not materially misstated. And secondly, to give a conclusion on your overall arrangements for securing economy, efficiency and effectiveness. So those are the two things that this plan is designed to set out our approach on. What we proposed to do was to take you through the key risk areas that we have identified, and so those are the areas that we propose to place specific focus on during the audit, and then obviously happy to take any questions. So if that's okay with you, I'll hand over to Malcolm to talk you through the financial statement risks on your page 81.
Thank you, Chair. As Kate said, when we plan the audit, we look for risks that go above and beyond the general scope that is the standard audit. A significant risk is a risk that permeates all across the financial statements and potentially is material across the whole accounts. We've only got two of those risks in our plan. The first risk, the risk of management override, is essentially mandated upon us by the auditing standard 240. Now you'll see this same risk, the risk of management override, in all external audit plans, and the risk is essentially that management are in a unique position to perpetrate fraud because of their direct ability to manipulate the accounting records. To mitigate against this risk, there are a number of fairly standard year-end procedures that we carry out. We test journal entries, we look at accounting estimates where management could potentially amend at year-end. We evaluate the business rationale for any significant unusual transactions, particularly kind of year-end month 13 transactions, and we evaluate the appropriateness of the accounting policies that relate to any of those findings. The second significant risk that we have in our plan is specific to you, and having taken over from PwC, you are, say, the unusual position of having £250 million worth of investment properties in your accounts, and then obviously the income stream that comes along with that, and that is obviously material to the bottom line of your accounts. Now our risk, essentially, there's two bits to it. There's the initial valuation of those investment properties. As incoming auditors, we need to satisfy ourselves that the valuation of those investment properties is appropriate to the accounting standard, and then the leases associated with those investment properties, we again need to make sure they're appropriate to the standard, because if the lease classification was to change from as operating leases, you get all that money as income. If the lease was to change for any reason, that would go onto the balance sheet and come off the income statement. So it's quite an important area for us to focus on. We've started that work. We've no reason, because obviously it's something we need to look at early and not just wait till August before we look at. We are looking at lease classifications, valuation now. We have no specific reason to assume that there'll be any problems with that. As I say, it's just really because we're incoming and it's a big amount and we need to satisfy ourselves that it's correct. And they are the two big risks. Underneath the two significant risks is just a reminder of the respective responsibilities in relation to fraud and error, which again is essentially a mandated piece of narrative that would appear in all external audit plans for the year, and it just reminds you that it's management's responsibility to identify fraud, etc., etc. And if you have any questions on that, feel free. Thank you, Jen.
Can I just say a few other things? The next section is on value for money risks, and I just wanted to point out to you that the criteria that we have to use this year have changed from the previous year. The National Audit Office have set us one new criteria, which is in italics at the top of the page there. To help us, they give us 3 sub-criteria and 10 areas of proper arrangements to consider, but make it very clear that we're not required to arrive at a distinct judgment in each of those areas. It's just to help us plan our work. We have completed our planning of that work, and at this stage we haven't identified any significant risks to the value for money conclusion. But obviously we'll need to keep that under review as the audit progresses, and keep reviewing your minutes and in case anything else comes out before we actually sign the opinion. But I just wanted to point out to you that the criteria have changed. 2 other things. One is the materiality level that we have set, which is on your page 87. So when we talk about material errors on your financial statements, we're talking about £2 million. But we set our testing levels at much below that, and any errors that we will find that are greater than 100,000 we will report to you. And finally, to go back to your initial point on page 91, the fees. Last year the fees were 74,000. This year they're 55,000. Those fees are actually set by public PSAA, so they're not set by us. But at this stage, with the risks that we've identified, we don't see any reason why there would be a need for any additional fees. Thank you.
I have one question for officers, for Mr. Jacquist. Having agreed the plan with the auditors, are there any material changes from last year?
Material changes in terms depends on your definition of material, Chair. So using the 2 million, there are no material changes, Chair. The communication of uncorrected audited misstatements is 100,000 this year, and it was, I think, 50,000 last year. That's the only change I would highlight.
Thank you. That was my recollection. I think that's something that this committee needs to consider today, whether we are happy to have the reporting at the 100,000 level or whether we want it to go back to last year's level of 50,000. Do I have any speakers? Councillor Keating.
Could I ask a question first, if I may, Chair, of the auditors? We will communicate, this is your statement, we will communicate uncorrected audit misstatements greater than 100 grand. So if you got, say for the purpose of discussion, 2 or 3 misstatements, as you would call them, of say 70 or 60 grand, but if you add them together they could well become more than 100 grand, but would you tell us what you were finding anyway?
The reason that we set a reporting level below the materiality level is so that we actually audit to a lower level than 2 million, so that if they accumulate, then actually we'd get you to adjust them. So we would report to you both those that have been adjusted, but also those that have been not adjusted above 100,000. We would keep a record of them on our files, anything below 100,000, but that level is set already so that we can accumulate things up to 2 million.
Council.
So who triggered the change from 50 to 100 grand? Do we know? Yourselves? Yourselves. All right. I see. We better go back to the previous auditors then. They were doing a much finer filter.
Sorry, Councillor. I'll just add that 2% for a materiality measurement of 2 million, 2% is the industry norm. And I believe that PwC did use 2% on balance sheet and I&E until 14-15, so they were working to the same levels. In 14-15, I believe PwC set two different materialities. They had 2% of gross revenue on the I&E statement, but they did use 2% of fixed assets, I think, on the balance sheet. So your balance sheet materiality last year was actually 10 million. So they were reporting on 10 million, but I think the 50,000 was agreed locally. Now, as Kate said, we record all the errors, and we're going to be recording these things anyway, so I'm happy to bring along an appendix with those errors below 100k at the end of the audit so that you can assess them uncorrected. I mean, we would expect Kevin to not want too many uncorrected errors in his accounts anyway, so obviously he would... Yeah, so we would assume him to be, if we did find them, we would assume that Kevin would amend them, but obviously those below 100 do fall into that gap, and we're quite happy to bring them to you if you want them.
Could I suggest, Chair, that if it's going to be reported to us anyway, the issue is a non-issue?
It's a non-issue providing it is reported to us.
Well,
so
we've been given an undertaking that there will be.
No, they're indicating that it could be. I think we need to request it as a committee.
I'd support that, Chair.
And I will second that. No, if it's on your list of uncorrected errors, we'd like to see it. If it's not on your list of uncorrected errors, because even you don't think it's significant, then there's no need to bring it to us.
Sorry, Councillor. Yeah, that's fine. We'll be record. So over between 50 and 100, those that fall into that gap, we'll bring to you in our report. Okay.
We're happy with that? Councillor Putty, do you want to speak?
No, I'm happy with that.
Councillor Miller.
Can I change the subject a minute?
We can move on quite happily.
Move on. Move on. It's a question for the auditors, Chair. I understood that the study or the assessment of the leases of our investment property has either just started or is ongoing. When would the auditors expect to have completed that to understand the magnitude of what the issue is, if there is an issue?
By the time we start our opinion audit, final accounts audit in, I believe it's July, we would know that. I mean, we've started already and we're not expecting any issues, I would add, but obviously we can't say that for definite until we've done the work. So.
Is that sufficient reassurance? Councillor Keating.
Will we be informed of that at that point?
I mean, any issues we would obviously inform you in the ICE 260 report in September. If we were to make any, or to request any huge material adjustments, we would come to you separately and as a committee and tell you about those or talk to you about those.
Sorry, Kevin.
Thank you, Joe. I was just going to say to the committee, obviously the committee also gets the draft accounts in June, end of June, and then if there were, not expecting any, but if there were any material changes, then they would be reflected in those draft accounts, and we would explain those to members.
Councillor Putty.
Just a question with regard to the fees. The indicative fee scale for Basingstoke and Dean. So what is the actual fee?
The indicative fee scale is the fee scale set by public sector audit appointments. And all I can tell you at this stage, having done the planning, is that the risks that we've identified don't indicate that we will be required to do any significantly more work than is in those suggested fees. So we anticipate bringing in the audit at this stage within those fees. The final fee won't be available until we've actually finished the work and when we bring you the report in September.
Councillor Tilbury.
Just quickly, I mean, I haven't looked at the fees. I mean, they're virtually half of what we were paying 10 years ago. Is that because PwC were charging us twice as much as they should have been, or is it more realistically because the level of work that's being done there? Because they were always set by the National Audit Office, but is it because the amount of work now that's being carried out is considered to be less, or are they just paying you half as much?
Be careful what I say here. Okay, professional hat on. It is fair to say that the scope of the audit has reduced considerably. The opinion audit is the same as it was before, and as Dean has said, there are not lots of new accounting policies that need to be taken into account this year, but the big area is on the value for money conclusion. I don't know how long you guys have been members here, but you may remember the use of resources assessment that used to be done to underpin the value. I see some grimaces around the table. The use of resources assessment was a huge piece of work that we had to do. And over the last few years, the scope of the value for money conclusion has reduced. And again, this year it's changed, so there's just one criteria instead of two. So that's one of the main reasons. The other reason is that the Audit Commission, who used to set the fees, undertook a couple of tendering exercises, and all the audits that used to be done by the Audit Commission's own staff were outsourced a couple of years ago, and the fees came down considerably a couple of years ago. And then there was another tendering round last year, and the fees came down again in that period. And the fees have been set for you for next year at the same level. But from 18-19, I think it is, you will be able to appoint your own auditors and agree your own fees with the auditors. Allegedly.
Sorry, Chair, can I just add to that? I mean, obviously the closure, the Audit Commission finally closed on the 31st of March last year. So the gradual savings from the 2010 Eric Pickles announcement of its abolition through to last year have essentially been realised now the Audit Commission's closed. I mean, public sector auditor appointments is a tiny successor body, but in terms of the amount of people it employs and the cost, it is nothing to what the Audit Commission used to be. So now the Audit Commission has disappeared. The cost of supporting that isn't in the audit fee anymore, as well would be.
Any other comments, or can we approve the audit plan? It's approved. Thank you. Right, moving on to item 12, and I'm sure Ernst & Young are going to stay to listen to this. Understanding how the Audit and Accounts Committee gains assurance from management.
You've missed one.
Oh, sorry. Oh, my apologies. Item 11, Treasury Management Quarterly Report, and it will be introduced by Dean.
Thank you, Chair. So on item 11 on page 95, this is the Treasury Management Quarter 3 monitoring report up to the end of December. Normally the monitoring reports wouldn't be this far out of date, as it were. The Quarter 3 report was scheduled to go to the Audit Committee in February, but we didn't have all the information that we needed to give you a complete report, particularly on the diversified credit funds. So we do have some sort of timing issues in terms of the dates of the audit committees and getting the quarterly monitoring to those committees. We have changed some of the dates next year or this year to make it easier for us to report to you, but we are considering producing a separate report on the diversified credit funds because there's quite a time delay between the actual getting the performance and then getting the sort of detailed sort of reasons for their performance. As you're aware, we employ KPMG to interpret the performance of the funds for us. So there's a bit of a delay there, so we're considering having a separate report on those. So future reports will be more timely, but they may contain raw information in terms of the diversified credit funds without any sort of interpretation of the performance of those funds. The budget for the year was revised in December. The original budget for the year was 3.5 million of investment income. That's been revised to 3.15 million. And we are currently, this report shows that we're forecasting to be slightly under, 51,000 under, or 50,000-ish under. But our latest forecasting, because obviously this was up to the end of December, our latest forecasting for the outturn is for us to come in pretty much on the revised budget at 3.15 million. There has been, since December, since this reporting date, there has been quite a lot of volatility in the value of our diversified credit funds, and their value fell to, the capital value fell to showing effectively a book loss, if you like, of 1.3 million at month 10, and then it came back to about 0.6 million by month 11. So that's quite massive moves each month, and obviously we're taking a long-term view on those, and the intention is that those will actually come back to a positive position. They are actually providing us with a good return. The M&G fund is averaging about 2.5%, and the BlackRock fund, which is the newer fund, is actually averaging slightly more than that. It's nearer 3% in terms of the income that we get from those funds. So if you've got any questions on the performance, I'll be doing my best to answer them. Thank you.
Councillor Keating.
I must maintain my record. The bottom of page 96 effectively says, whilst it's not as good as it might have been, it's better than other local authorities. That's my reflection back to you of what it says. So the question, a number of questions really is, what are the local authorities? How many of them? And what are they normally investing in? I mean, are other local authorities that you don't look at investing in things giving a higher return? We don't know. Now, whoever is writing that statement will have had some evidence in front of them, or in a computer or whatever, saying, well, other local authorities have a return of. Now, are you relying on those people that we hire to invest our money to tell you these things, or are you relying on evidence that you have additionally? Because I'd like to understand how many other local authorities, are they comparable? There are the very few that would compare direct with us, because we have money and most of the others don't. But I think you got the message to help me to understand. Thank you.
I'd love you to respond.
Yes, I mean, the council takes part in benchmarking for treasury management function. Part of the benchmarking is the Island Coast benchmarking, which you've got in this report. We also take part in the SITFA treasury management benchmarking, although that's sort of dying off a bit. It used to include 50, 60, 70, 80 councils. It's down to sort of less than 20. So it's become less useful in the sense of, but it does still give you an indication of the types of things that other authorities are investing in and what sort of returns they're getting. The Island Close one, although I know they are employed by us to give us advice, but part of that advice is to provide the benchmarking information in terms of their clients. So they have, you can see from the benchmarking charts or chart. All of those dots are individual clients. They're not necessarily all similar local authorities, but just looking at that scatter of information, you can get some comfort from the fact that we are where we would hope to be, which is in the top left-hand corner, where we're getting a higher return for the lowest amount of risk. So it's not we can provide you with more details in terms of which particular authorities potentially subject to confidentiality, but you're never going to get a perfect benchmark unless you can find authorities that are so similar, but nevertheless it does give us an indication of how we're performing generally, but it's only one part, as you say.
Councillor Keating.
One of the reasons I asked the question is basically I know that some local authorities are actually building houses, and generally speaking, as I understand it, if you build and rent houses, then your rate of return is more than 2 or 3%. Now, I'm not suggesting what it's going to be, but it's certainly more than 2 or 3%. And the best we're getting is 3%, if we're lucky, at the moment. And I understand that, with interest rates pegged by the government at 0.5%, it's not surprising. But if we compared ourselves with people who invest in housing and retain the property and rent it out, would we come out okay on that?
Well, you're talking about sort of investment in its wider sense. This focuses on treasury management, which is cash investments. So this is only looking at those authorities that have cash investments and what sort of returns they're getting on those cash investments. So it wouldn't include things like money that we have invested in investment property, which could be yielding, who knows, but certainly far more than 3%. And it wouldn't include things like the alternate investment strategy and some of the other things that the council's doing. So you need to look more globally in terms of all of the investing activity that the council's doing. And at the moment, I don't think there is actually a benchmarking or a way of comparing authorities in terms of all the different things that they're doing and what the overall returns are that they're getting. But that's part of the council's sort of wider investment strategy.
Mr. Jackwis.
Well, Chair, thank you. I was just going to say, just to build on what Dean was saying, obviously that type of issue is an overall strategy, and part of that is looked at in each budget time. So this is really reporting on. And that's that wider strategy is a member-led decision on where the council's investing. This is a performance against the agreed treasury management strategy for the cash investments, and that's why it's, as Dean was explaining, that's why it's limited to explaining that and not those wider issues.
Councillor Putty.
Well, thank you, Chairman. It's just that I really feel that the overall position of the investment portfolio and return, and I'd really like to congratulate the officers that despite being lower than anticipated, the overall return still remains significantly higher than other local authorities' average returns. And this has been achieved with one of the lowest level of credit risk. So I would feel that the officers have done a very good job for us.
Noted. I must admit, the main issue that has arisen through Treasury management has been the low level of interest rates and the fact that we haven't been putting money into long-term investment, but keeping it all in short-term investment, and that has cost us. So that's certainly a negative aspect, but I can understand exactly why the officers have done what they've done, and we've approved it here. So hopefully in the future we are going to see interest rates start to come up, and we'll be going back into long-term rates, which will smooth out at a higher level the income we have available to us for our residents. Right, anybody else, or can we note the report? Note the report. Item 12, understanding how the Audit and Accounts Committee gains assurance from management. We have a letter from Ernst & Young addressed to me as chairman, and I did ask to have this tabled so that we could discuss it. And when I had the pre-agenda meeting last Thursday, I asked Mr. Hood to actually come up with a suggested response to each of the items so that the committee could understand exactly how we answer those questions, how we fulfil our role. And as Mr. Hood is here, I will ask him to present it.
Thank you, Chair. Shall I just go through each of these different
I think that's the way we have to do it because it has been tabled today.
Yeah, okay, fine. Right. You have no chance. Right, okay, but if I just sort of summarise what the first question, this is questions for this committee, was about the assessment of risk, that the financial statements may be materially misstated due to error or fraud, and how does the committee have an oversight of management's processes in respect of that. So how do you as a committee look at how well management are assessing the risk that financial statements may be materially misstated? And the suggested response is along the lines of the fact that the committee receives a report every 6 months from the Chief Internal Auditor, and that provides information on the corporate risk register. Within the corporate risk register, one of the items there is finance and budgets and fraud as well. So you're able to see what the council's, well, you're able to monitor the council's processes through that report there, because you would be able to identify from that if there are any deficiencies in the controls and to the extent to which controls are working properly. You also receive, as you have done on the agenda today, the internal audit plan, and the internal audit plan includes a review of all the core financial systems, which would be used to produce the statement of accounts at the end of the year. So you will see, as a result of those audits going through during the year, what the opinion is on the control environments again there, so that you can see whether or not the right controls are in place and whether those can be relied upon. So again, that I would suggest that's one other way in which the committee can get reassurance that the controls that are there are working. Obviously you also get the external auditor coming along and presenting their external audit plan, so it's another way in which you're able to monitor the management success in having the right procedures in place. And also the Section 151 officer, Kevin, signs a statement of accounts, and you receive a ISA 260 International Standard of Auditing report, which identifies any errors that have come around. So I think there's a number of ways in which you can show that you do receive information that enables you to monitor the extent to which financial statements are being properly reviewed and assessed. Second question is about identifying and responding to risks of fraud. Again, that's coming back to reports you get from the Chief Internal Auditor. We receive 2 reports on fraud each year, and for example, I think there was one back in November that was looking at the SIPFA Code of Practice on fraud and corruption, so you looked as a committee at what the best practice was on fraud and corruption and did a self-assessment through that. Moving on to the next question about communicating to employees on business practice and ethical behaviour, and how you again are able to monitor the procedures that are in place. You as members, all members get access to the Friday emails which come out. Those advertise various initiatives that are going on. For example, we have an International Fraud Awareness Week, and there's also presentations and workshops that are presented to staff. And we also have the various policies on fraud and ethical behaviour, which are linked to those emails that come out. So if you click through to the various policies there, you'll be able to see exactly what procedures the Council has set up. Looking on, the next question was around encouraging employees to report fraud concerns. Again, through the Friday email, you'd be able to see that there is a fraud initiative that happens there, and there's a fraud hotline. There is mandatory e-learning, which is available for staff, and there's a whistleblowing policy, anti-fraud policy, all of which has links to them through the Friday emails. And so it was also an anti-fraud report that came to this committee back in April 2015. And that made you aware of the different anti-fraud measures that were available. The process for communicating to the committee, processes for identifying and responding to error and fraud. But through all the reports you get from internal audit, they will identify if there's any shortfalls, as we said before, in the control environment. And fraud is also identified in the corporate risk register, and you receive, I think, updates every 6 months on the on fraud through the reports, and those reports will identify mitigations that are in place to assess or to correct any problems that occur. I mean, I think, for example, one of the recent audits looked at the depot down at Wade Road, and that might have identified some issues there. So you're aware through that report what the issues are in that area, and if there's any mitigations, new procedures need to be set up. Next, going on to question 2, was about how does the committee oversee management processes for identifying and responding to risk of fraud, possible breaches of fraud. The response there that you could say you cover that in the internal audit progress reports you receive and through the corporate risk register. Again, that's reviewed every 6 months, so similar answers to the previous one. Are you aware, next question 3, of any breaches or deficiencies in internal controls? Again, yes, you are, because the reports that come through from internal audit cover those areas. They give you an audit opinion on the control environments, and they give you timescales for implementing any changes, and they report back to you on the progress with implementing those changes. On questions 4, second part of questions 3, sorry, is the committee aware of any actual suspected or alleged frauds? You have a fraud update report that comes to you as a committee. The last one you received was in November 2014. The next one's due in June 2016, and that will identify any fraud that we're aware of. One of the main areas that to be aware of is through housing benefits and overpayments, that sort of area there. And again, you'll be aware through that of the actions that are being taken. Question 4, is the committee aware of organisational or management pressures to meet financial or operating targets? So it's about saying, is the committee aware that management may be putting people under pressure to meet financial operating targets? I said I hope everybody here, the whole committee, would be aware that the council does face challenging times. We've got cuts in funding, other financial pressures, and we're always trying to strive to achieve value for money and to deliver savings. That means that there is pressure that's on management to identify savings, but I would say that it's not undue pressure. So I don't think the committee is aware that there is pressure, but I don't think it's up to you, but I would suggest you'd say that there's no undue pressure that you're aware of. How does number 5, the questions, how does the committee gain assurance that relevant laws and regulations are complied with, and are you aware of any non-compliance? They have a process, as all members will be aware, that all decision reports have a financial implications section and they also have a legal implications section. So within that area, both management and members will be able to identify the financial implications of any decisions that are coming forward. We've also got the monitoring officer who's got responsibilities in that area. Moving on to question 6, is the committee aware of any actual or potential litigations or claims? Well, the committee gets the statement of accounts, and in the statement of accounts we have the contingent liabilities section, and there are no contingent liabilities that have been identified there at the moment, so you're not aware of any through the financial statements. You'll be aware there is an insurance officer, so he'll be dealing with claims that come into the council, insurance type claims. And again, if there are any control deficiencies that could lead to claims, they would be covered in audit reports. So you would be aware of those through reports that were coming in on different activities that were going on covered through the audit plan. And finally, how does the committee satisfy itself that it's appropriate to adopt the ongoing concern basis? So how can you be confident that the council is operating as an ongoing concern? Well, you received the medium-term financial statement and strategy from the Chief Finance Officer, which is covering the council over the next 4 years, looking at what the forecast position is of the council's finances. There's also a review by the scrutiny panel, and we have regular monitoring reports to see the position financially. Again, you've got Section 151 Officer, who's also got responsibilities in this area, and you have direct links through the meeting. So I would suggest that you've got good responses that you can give to all of the different questions there.
Thank you very much for that. I was very grateful for us to have our minds concentrated on the areas where we do have assurance. I've got a few comments here. When we look at the risk register, we are very dependent on the mitigation, so it's good to see that internal audit will be reporting on just how effective that mitigation is. We looked at Wade Road last year, as you mentioned. As a result, internal audit are looking at the insurance arrangements because there were a lot of problems at Wade Road. And in terms of the internal audit reports, the number of fundamental issues has dropped considerably since I've been on the committee. Yeah, it's remarkable just how well we have managed to get that down, and the response we've had from officers on that. However, on the litigation and claims, it was mentioned that we only see it at the end of the year as part of the audit full audit report. We don't get any routine reporting of litigation and claims coming to this committee. That is dealt internally by other people. So, any comments? Councillor Freemore.
Yes, Chair. This, just at the top of page 3 or 4, is the committee aware of any actual suspended as suspected or alleged frauds? Am I the only one that thinks that's quite a long period of window of reporting from November 14 through till June 16?
It does seem a long period because it's certainly more than annual.
Yeah, thank you, Chair. I took a view that I wanted to report to the committee on an annual basis, which was an end-of-year point of view, and so the first annual report on fraud in terms of what has my team been doing, what have we found, will come to June. But yes, I acknowledge that November 14 to June 16 is a large period of time, but we've been dealing more with the practice side of things in terms of asking the committee to approve the anti-fraud policy, for example, and doing this SIT for Code of Practice self-assessment, which the committee also received.
I think the committee would like to see this as at least an annual report. Okay. Councillor Keating.
That was one of the issues that I too was concerned about, and a confirmation that we will get an annual report is welcome. But can I move back to the first page, at the bottom of the page? I have serious concerns about the suggestion contained in this last paragraph on page 1, that all members are aware through the Friday catch-up email. Well, first and foremost, I was not aware that the Friday catch-up email, which is directed to staff, contains important and relevant information which is essential for people like us to read. Because I don't read the Friday catch-up email all the time, because I was not aware that it was of such prominence or significance as is suggested here. And if it is of such prominence and significance as is suggested here, I believe we should get the information in a different format. It should be a report to the Audit Committee, etc., etc., etc. Now, and to rely on the Friday catch-up email, continuing over that page, continuing over the page, top of page 4, I have no concerns with what's written in terms of the reports that we get, because I acknowledge and understand that we do get lots of reports. But I do not see or appreciate, I have never been told that the Friday catch-up email is a reporting mechanism. And I don't believe it is a reporting mechanism, and neither do I see us as required to read it. Now, I think we need to get a clarification here, and very simple, because to be told in the middle of a meeting that all the catch-up emails that on every Friday about who's leaving, who's whatever, the discounts available if you go shopping, and in the middle of that report, the middle of that email, there are significant, pardon?
I don't think you're correct.
Well, I'm just expressing my opinion. I have been wrong before.
Councillor Keating is speaking. Please let him finish.
Yeah. No, so I don't believe that reliance on the Friday email is a legitimate tool for people like Audit. Now, I understand that if the email is to all staff members, somebody would take the opportunity to say, don't forget we're doing this, or don't forget we're doing that, and there's nothing wrong with that. I'm not suggesting the Friday catch-up email is wrong. I'm suggesting it should not be confused with a reporting or understanding mechanism that should be applicable to Audit, for example. Now, can I just respond to Councillor Sherlock's intervention? And he's legitimately saying we do get the councillor's update, whatever you call it. Yeah. My computer, which was tweaked by the computer, not the Conservatives, by the computer people downstairs who are not Conservative, so I'm told, doesn't allow me to get Friday catch-up emails. Or it does allow me Friday emails, but not the councillor's bulletin. I'm only telling you the facts, right? So I think we need to have a much clearer understanding of the reporting that we should be insisting that we get copies of, either on email or whatever, and those things which are not essential. Because I don't read the Friday emails. I've got too many other bloody emails to read. Forgive the phraseology. Thank you for indulging me, Chair.
Well, I think we did indulge you there. My understanding is with the Friday catch-up that it has got links into the main computer on where policies are. But you can go to those policies without going through the Friday catch-up. That is what we should be doing. There's merely an opportunity by you looking at the Friday catch-up, and it does tell you what's going on within the council, which may or may not have direct relevance to this committee. I don't think it is actually a reporting mechanism. Mr. Gundry.
I'd just like to add something there. The reason why we put that response in is because the question is about communicating to employees. So what we were suggesting is that the committee are saying that we are aware that the Friday catch-up email is used to inform employees of the International Fraud Awareness Week. Get yourself on one of the workshops, anti-fraud policies being approved. So it's not necessarily a reporting mechanism to inform the audit committee this is going on. This is purely an employee information. And in terms of informing the committee, over the page it says November 15 committee received a report from myself, which is a self-assessment on the CIPFA Code of Practice against fraud. In that self-assessment, all those were referenced. So I'm quite comfortable from a committee point of view in responding, is that yes, we know that employees are communicated via Friday catch-up email for X, Y and Z, but the committee has also been informed by the fraud report for myself, if that helps in any way at all, Chair.
It certainly helped me. Councillor Keating, anything to add? Anybody else got comments to make? I'd just like to ask the external auditors whether that is the sort of response they were hoping for. Thank you. I shall respond accordingly. And before we all go home, agenda item 13, the committee work plan through to March 17. I think that's just for noting. Okay. Before we go, Councillor Leake isn't with us this afternoon. He has served for many years on this committee. He has given his committee great service, and I'd just like to thank him on behalf of the committee for all the work that he's done. Meeting closed.